Hi, I'm Melanie Brown. I'm the VP of Data and Analytics at Key Data Dashboard, the leading provider of vacation rental data. Welcome to Inside the Index, where we share quick market trends, some insider tips, and just an overview of what's happening in the U.S. vacation rental market. Our first segment is the Big 5 in 1, or the big top 5 KPIs that you need to know in 1 minute or less. Okay, let's start the clock. So the first metric here is paid occupancy, which is the number of guest nights booked out of all nights and across vacation rentals in the U.S. Q3 ended at 42%. We had some modest year-over-year growth there, which was encouraging after a couple years of occupancy decline post-COVID. July notably up 2%, August up 4%. So August ended really strong in terms of occupancy. The average daily rate is our second KPI. It's the average amount of revenue generated per guest night. Averaged $326, down slightly this summer, so down about 1 to 2%. So still seeing a little bit of rate softening. RevPAR balances the two as the average amount of revenue generated per rental per night. Up slightly in August, boosted by that occupancy rate. A little dip though in September, about 6% lower year over year after that peak summer travel season. Again, driven by lower occupancy in September. And then the booking window was about 5% shorter during Q3, so travelers continue to book their stays closer to arrival. And then stay length also shortening a little bit, down 1 to 2%. So guests overall are booking closer and staying shorter. For deeper insights on these metrics, grab the US Key Data Index. It's live on our website. It's got these metrics and a whole lot more broken out on a regional basis as well. We'll put the link in the description. Our second segment does take a look at regional market movers. So which market stood out this quarter, who's lagging a little bit? Hawaii continues to be a strong leader. We saw some rate growth there with ADRs for the quarter up 5% and RevPAR also up 5%. Really indicating that these premium rentals and destinations are doing well on a year-over-year basis. The Southeast, however, had a slight dip, so ADRs down 2%, RevPAR down 1%. We saw a lot of price sensitivity hitting that late summer travel season. Also some major Southeast destinations have had hurricanes and other natural disasters impacting occupancy and revenue in recent years. New England and Midwest are both showing, modest occupancy growth and solid rates. RevPAR is up around 4 to 5% for the quarter. Drive-to demand in these markets is still really strong, which is encouraging. And then the Southwest is a surprised upside here. So occupancy up 5%, offsetting a little 2% decline in ADR, meaning RevPARs ended the quarter up 3%. Some takeaways on a regional basis. Q3 was driven more by rate strategy than just demand. The people in markets that performed well, balanced rates well with occupancy and demand. Some markets are maintaining pricing power like Hawaii, and they're coming out ahead because they can increase rates a little bit. Travelers, however, are confident. They're booking their trips, but they are still value conscious heading into the winter. So pricing continues to be a pain point. Our segment 3 is called Crystal Ball. It's a time of year where I always get asked, what do I see in my crystal ball for the next year as people start to plan their strategies? So let's give that a quick look. Holiday pacing right now is looking pretty good. November RevPAR up 1% year over year. December right now pacing 7% ahead. So we're really seeing a strong holiday season. Pacing ahead, we still expect a ton of last minute bookings. We still expect the guests to take shorter stays and plan those last minute trips. And so revenue's growing for the holidays and for the rest of the year, but volatility remains and guests are going to continue to be tricky. So success is going to depend on making sure your prices are dialed in for those last minute stays for the rest of the year in early 2026. Our last segment is on insider tips. So now that you have all of this data, what do you do with it? The first piece of advice is to lean into last minute demand. Booking windows have consistently been falling for the last few years. And so I think we just need to embrace that they are going to book closer to arrival and make us all a little bit nervous when those early season bookings don't appear. So, adjust those rates a little earlier, keep an eye on that booking window, don't panic and slash them all, make a little adjustment on a weekly basis. For example, second tip, guests are gonna book earlier, they're also gonna spend less time in your properties with shorter trips, and they're looking for more flexibility. So combined, that means, time to look at flexible cancellation strategies and instant booking options, again, for those last minute travelers. Adjust your minimum night rules to make sure that your minimum night is not so much longer than the length of stay that people are looking for. And then promote midweek or quick escape convenience travel to capture those people who are just looking for a short stay booked at the last minute. That's really helpful during the off season as well. And then finally, number 3, if you haven't already done so, prep for winter in the first quarter of 2026. Again, December RevPAR is up 7% year over year, so use that momentum. Let's keep it going. It's also a great time to make sure you have a strategy in place to capture your holiday travelers. If they're booking through the OTAs, it's a great time to make sure that they know who they're staying with and can book directly with you next time. And part of that is also just generally reviewing your channel performance heading into 2026. So know who's booking where and how those are changing year over year. And then through all of this, it's going to be really important for the rest of the year and through 2026 to stay flexible. Expect those last minute surges, expect some soft spots as the market continues to change, and just make sure your strategies and your policies, both on your back end and guest facing policies, are tuned to be able to be a little more flexible than we have been in the past. So that's it for this episode of Inside the Index. Drop a comment, tell us your favorite segment, what you'd like to hear more of for the next quarter, and then be sure to visit keydata-dashboard.com to learn more, to request a personalized dashboard demo. We've got a lot of great content coming out about market trends, and then we've also just published our 2026 Vacation Rental Insider or Industry Outlook. That is a big property manager survey and just shows how everybody is feeling about 2026. So thanks for listening and see you next time.